If you're a content creator and your business income is still hitting the same bank account as your rent and your groceries and your Netflix subscription, you may have a problem and you might not even realize it yet. And it's one of those problems that don't look like a big deal until it absolutely is. So today we're talking about why I believe separating your personal and your business finances is one of the first things every creator needs to do, and what can happen if you don't. So I own a Mazda Miata, and I bought it specifically to race. Right now I'm doing autocross races, but I'm working towards road racing and time trials and maybe even wheel-to-wheel racing in the future. I love the car, and a while back I was at an autocross event, and the last run of the day I noticed the car was losing a little power. The idle felt rough and something was obviously off. So I parked it right after my run and I started checking things over. I pulled the dipstick for the oil, and what I saw was not oil. It looked like a chocolate latte. Milky, frothy, and it's basically wrong in every way possible. That's when I knew I had a head gasket failure. What happens is the coolant and the oil have now mixed together inside of the engine. And when those two things mix, it's bad. Destroy your entire engine type of bad pretty quickly. So I had the car towed home immediately because even one more drive could have been, the difference between permanent damage and not. So then it was time to fix it once I got it home. I replaced the head gasket, which is kind of a hard task, but then I got down to trying to clean everything out. So I drained all the contaminated oil. I actually did 3 full oil changes back to back to flush everything out. And then I drained and flushed the coolant system too, because it had gotten oil inside of it. Basically, both systems were just completely contaminated, and I had to completely separate them, clean them out, and rebuild before I could get back on the track. So here's the thing. Your finances can work in this exact same way. Your personal money and your business money are running through the same account, and they can contaminate each other. And you can have trouble tracking your business expenses cleanly. Tax time might just become a horrible nightmare, and the longer you let it go, the harder it can be to untangle. So today we're going to talk and walk you through exactly how you can separate them and why it matters more than most creators think. Hi, I'm Brad Clark, and this is Money Made Easy for content creators. I am a certified financial planner, and I co-own Finchley Finance, which is a financial planning company built specifically for content creators and creative business owners. On this podcast, we break down financial stuff that actually matters to your business so you can stop worrying about money and get back to what you love. So let's start with why this can be a big deal. Because a lot of content creators here separate your finances and think, yeah, I'll get to that eventually. But here's the thing, the longer you wait, the worse it can get, just like that engine I was talking about. So first, taxes. If your personal and business money are flowing through the same account, you're going to have a more difficult time at tax season. Your accountant's going to have to go line by line through every transaction and figure out what was a business expense and what was you just buying groceries. So this is going to take time, it's going to cost money, and you're either paying your accountant more to sort through the mess, or you could be missing deductions because nobody can tell what's what. Second thing is legal defense. A lot of creators set up an LLC thinking it safeguards their personal assets if something goes wrong. And it definitely can, but only if you actually treat it like a separate entity. If you're running everything through one bank account and you're mixing personal and business spending, a court could look at that and say, this really isn't a separate business. This is just you. That's called piercing the corporate veil. And it means your LLC defense goes away. All that work setting it up is gone because you didn't keep things separate. And third, you genuinely may not be able to tell how your business is doing. If everything's in one account, you may not actually know how much your business makes or how much it costs to run or whether you're even profitable. If you see one balance and hope it looks okay, that's not a financial system, that's just guessing. So here's the good news is my fix is not complicated. You just need two things to start. The first thing is a separate business bank account. Just go to your bank or open one online. It doesn't need to be fancy or anything. You just need a checking account that is only for business. All of your income, brand deals, AdSense, affiliate revenue, sponsorship payments, whatever, it goes all into that account. All your business expenses like software, equipment, contractors, travel for work, that all comes out of that account as well. You set it up so nothing personal touches it. Number two, go ahead and get a separate business credit card. It's the same idea as this last, tip here is you use the card for business purchases only. That way, at the end of the year, you've got a clean record of every business expense in one place. You don't have to sort or guess. No digging through statements trying to, remember what was dinner and what was a client meeting or a date night. That's basically it. That's the foundation. One business bank account and one business credit card. Everything else just builds on top of that. So you've got the business account set up. Money's coming in, business expenses are going out, but you still need to eat, right? You still need to pay rent. So how do you actually get money from your business account to your personal life? This is where it depends on how your business is structured. If you're a sole proprietor or maybe a single member LLC, you're typically going to do just what's called an owner's draw. That's just a transfer from your business account to your personal account. It's pretty simple. If you're set up as an S Corp, it works differently. You'd actually pay yourself a salary through payroll, like an employee of your own company, and then you might take additional distributions on top of that. The rules around how much salary versus how much in distributions get into some real specifics that depend on your situation. The key thing to know right now is however you do it, make it consistent and make it trackable. Don't just Venmo yourself random amounts whenever you need cash. Set a regular schedule, maybe twice a month, where you move a set amount from your business to your personal. That way it's a clean paper trail. Your books stay clean and you always know what your business is actually keeping versus what you're taking home. And if you're not sure which method applies to you or how much you should be paying yourself, that's a conversation to have with your financial team, not something to just guess on. The last thing here is, and it's one of the most important, even if you set everything up the right way, there are a few habits that sneak in and mess it all up again. The biggest one is using your business card for personal stuff. So you're at dinner, you grab the business card because it's on top of your wallet and you figure I'll sort it out later. You won't, and now your books are dirty again. So keep the cards in different spots and make it physically harder to grab the wrong one. Second, random transfers, moving money back and forth between the accounts whenever you feel like it with no consistency and no documentation. Every transfer between your business and your personal account should have a purpose and a pattern. If your accountant can't look at your transfers and immediately understand what's happening, you've kind of got a problem here. The third thing here as well is letting other people muddy the water. This doesn't apply to everybody, but some of you it may. If you've got a business partner or a manager or anyone else who has access to your business accounts, make sure that they know the rules. One person using the business card for a personal expense can create a bookkeeping headache that's going to take hours to clean up. So the whole point of separating your finances is just to build a clean system. And a system only works if you actually stick to it. It doesn't have to be perfect, it just needs to be consistent. By the way, if you're listening and thinking, I don't even know how my business is structured, let alone how I should be paying myself, that's exactly what we do here at Finchley Finance. We build your financial system, we manage it, and you get back to creating. If you want someone to just handle it, go ahead and go to our website, finchley.com, and book a first look call. All right, let's keep going. I'm going to bring it back to the Miata. When the coolant and the oil mixed inside the engine, it didn't blow up right away. It was going to slowly make everything worse. It was going to get bad quickly, though. But I lost power. It was a rough idle. There was damage starting to build under the surface, especially if I didn't address it pretty quickly. And the fix wasn't just draining the bad stuff out once. It took 3 full flushes to get the system clean again. The longer those fluids were mixed, the harder it was to separate them. So obviously your finances can work the same way. The longer your personal and your business money are tangled together, the messier it's going to get and it's going to be harder to clean up. But the fix can be pretty straightforward. Get a separate business bank account, get a separate business credit card, pay yourself consistently on a schedule, and stop letting bad habits recontaminate the system. You don't have to overhaul everything in one weekend. Just start by separating accounts. That's step one. And if it feels like more than you want to figure out on your own, well, you don't have to. That's it for today. I hope it gave you a clear picture of why separating your finances matter and how to actually get it done. If you want help building your financial system the right way, that's what we do at Finchley Finance. It all starts with a first look call. It's a free call. There's no pressure. There's no commitment. It's literally just a conversation between us to figure out if we're the right fit and if we can help you solve a problem you may be having. So again, you can book one at finchley.com. If this episode helped you, please subscribe and share it with a creator friend who needs to hear it. It helps more creators find the show. You can also find us on Instagram at Finchley Finance. Thanks for listening. I'm Brad Clark, and this has been Money Made Easy for content creators. Now get back to what you love. Brad Clark is a financial advisor, and Lucinda Clark is a registered administrative assistant of Cetera Wealth Services, LLC, member FINRA, SIPC. Finchley Finance is located at 15072 Snowsill Drive, Frisco, Texas, 75035. Brad offers securities through Cetera Wealth Services, LLC, member FINRA, SIPC. Advisory services offered through Cetera Investment Advisors, LLC, a registered investment advisor. Cetera is under separate ownership from any other named entity. The views expressed on this podcast are for informational purposes only and are not necessarily those of Cetera. They should not be considered specific advice or recommendations for an individual. Neither Cetera nor its representatives may give legal or tax advice. The views and opinions contained in this material are those of the author and not necessarily the opinion of Cetera, and not a recommendation or solicitation to buy or sell any securities or investment products mentioned herein. This information is from sources believed to be reliable, but Cetera Wealth Services LLC cannot guarantee or represent that it is accurate or complete. Guests on the show are not affiliated or registered with Cetera Wealth Services LLC unless specifically stated. Any information provided by the guest is in no way related to Cetera Wealth Services LLC or its registered representatives. Due to volatility within the markets mentioned, opinions are subject to change without notice. Any references to specific companies, platforms, brands, or products through this podcast, including but not limited to social media platforms, content distribution services, affiliate programs, e-commerce platforms, or consumer brands, are made solely for educational and contextual purposes relevant to the content creator industry and primarily to distinguish a company's goods or services, establish context, and prevent listener confusion. Such references do not constitute a research report, investment recommendation, solicitation, or endorsement of any kind and should not be interpreted as advice to buy, sell, or hold any security instrument or to participate in any particular trading strategy. Finchley Finance and its representatives do not hold Series 86 or 87 registrations and do not publish research reports. Opinions expressed by the owners of this content do not reflect an endorsement by Cetera Wealth Services LLC or its affiliates. Any hypothetical examples, scenarios, or case studies discussed in this podcast are illustrative only and do not represent the actual performance of any specific investment, strategy, or individual. Any figures, percentages, dollar amounts, or numerical examples used may be hypothetical or illustrative in nature and are not intended to represent guaranteed outcomes, specific investment returns, or verified third-party data unless explicitly stated otherwise. All information herein has been prepared solely for informational purposes. Past performance does not guarantee future results. All investing involves risk, including the possible loss of principal, and there could be no assurance that any investment strategy may be successful. Words or phrases that may appear absolute, predictive, or superlative in nature, such as will, always, never, best, should, would, or similar language, are used conversationally for clarity and educational purposes only, and should not be interpreted as promises, guarantees, predictions, or endorsements of any specific financial outcome, strategy, or product for any individual listener.